We have Nipun Mehta, who's founder and CEO of Blue Ocean Capital Advisors. He joins us now on the show. Nipun, broadly speaking, we've had Infy put out a good guidance. Would you say that we are going to see some sort of a re-rating of the IT sector on account of just that one guidance coming through?
I wouldn't really think so. I think we need more such guidance upgrades that need to be coming in from more companies. We've really seen muted performance from most of the larger companies, save TCS and HCL probably. I think as an industry, a re-rating could come about only if you have either of most companies actually upping their guidance, or at least 1 or 2 quarters of some of the larger companies continuing to show a positive guidance. I think till then you are still likely to see uncertain moves towards re-rating, except for companies maybe like an Infosys where there are these positive noises, results far better than street expectations. Probably another such quarter of a positive guidance or client addition, and there just could be yes, a potential re-rating that could happen. But till such time, I think it's really too early to generalize that virtually the entire industry re-rating or could happen, or the entire industry is turned around in terms of revenues. Challenges do remain. IT budgets still haven't come back to what they were in 2007, 2008. So really it's going to be on a case-to-case basis that you're going to see a change in terms of guidance or change in terms of re-rating.
Nipun, what's your view on the overall movement of the equity markets on the back of supportive policies in the run-up to the budget? Do you see us reaching a peak and then perhaps scaling down by the end of the year?
Well, the outlook does look somewhat uncertain. When you look at the IIP numbers, yes, for sure, one can look at it in a positive manner and say that yes, probably the fall has been now. You've seen a bottoming out of the fall that was there in terms of all the IIP numbers that were there. But really, I think there's no clear indication of any sign of an up move in terms of potential IIP growth or GDP growth that is there. One keeps wondering on what could be the trigger for it, and very clearly there has to be a change in investment cycle, which is really not coming about, whether it is from specific sectors or specific segment of companies. It could be PSU companies which could trigger this kind of an investment cycle turnaround through a capex growth that is there. It could be the potential trigger could be a fall in interest rates, and probably a greater cut than what the market is expecting. If there is that kind of a cut that could be there, that could be a trigger. So clearly there is an up move, GDP up move trigger that seems to be missing, and no clear indications of how earnings visibility could significantly change for 2015. For 2014 probably there is a gradual up move expected, but really too gradual. Approvals which need to be coming about, that's another trigger that could be there. Approvals for power projects or infrastructure projects, that's another trigger that could come about, which could change the direction and fast enough in terms of GDP growth. So probably when you look at it from today till the budget, there will be that uncertain scenario in the market. Probably the RBI policy could change that in a serious manner. And more importantly, any of these policy reforms that are being anticipated, that's something that could significantly change the market direction to an up move. Budget, of course, being a pre-election budget, or the last budget before the election, could be populist. How the subsidy is going to be managed,
right,
and how the deficit is again going to be managed is something that's going to be the key. But I think a few more results like the Infosys results could probably be another positive trigger as far as the market is concerned.
So you do have the positive momentum in the markets, which is now tempering off. It's 59.63 on the index. The Sensex holding up marginally in the green. The cuts are widening now for the FMCG index. Oil and gas is also showing you inherent weakness. And barring the IT pack, which is refusing to budge, you've got the likes of Reliance Infra, Unilever, ITC, ONGC, Grasim, which are seeing quite a bit of selling pressure. Metal counter is holding up, Nipun, which brings me to a question on the overall commodity pack, particularly metals. Do you think that the kind of rally that we've seen off late is more a function of the restocking cycle, a risk on trade, rather than the structurals of the metals pack actually changing?
Well, to a degree, yes. I think structurally there hasn't been a significant change as far as metals are concerned. But very clearly signs of a global demand-supply mismatch that existed seems to be correcting itself. And as you see greater demand coming in from China, there are greater indications coming in over the next few months in terms of the GDP up move that we have already seen partially. If that does come about, that's something where you're going to ensure that metals are probably going to be sustaining their price up move that has been there. But structurally till then, it looks difficult to be looking at a sustainable turnaround that could be there. 2013 definitely looks better for the metals pack, definitely better than what we've seen for 2012. How sustainable that will be will really depend a lot on, like I said, China and on the domestic market and how the capex cycle actually turns around.
And Nipun, running out of time, a quick list of your top trading recommendations and investment bets. Well, I think when you're looking at 2013, well, the banks seem to be still continuing to see the top picks. You could have a pick between private sector banks where you're seeing stretched valuations to some extent, but more probably on the PSU banks, mid-sized PSU bank space. FMCG, again, valuations look stretched, but in terms of the results, or in terms of the quarterly earnings, they are likely to be sustaining themselves in terms of the growth that they've shown, which will ensure that they will continue to either outperform the market or they'll at least be market performers. They're unlikely to be market underperformers. But quite a few sectors where uncertainty does exist. IT will be a surprise package if at all for the December quarter and for the March quarter, depending on how the other companies probably perform. And if there is that positive surprise, I think you could see again IT coming back into reckoning. But I think very clearly what stands out is FMCG and PSU banking when you look at either shorter term trading or in terms of a longer investing horizon that you're looking at.